Good morning, everyone. Welcome to the European crossover webinar. We're still awaiting Italian retail sales. It's supposed to be released now, so a little bit late. And we do have Bank of England. If you saw Blake's week ahead video, he wasn't expecting much because with the whole Brexit thing, no one's expecting them to take any type of action in light of the circumstance. Or environment, whatever you want to call it. At 7 a.m. Eastern, we do have just came out. There we are. Well, better than a beat here, but I don't see it. It hasn't dipped in here. No, I'm not seeing it here, but they said it was a beat. Later on today, we do have a Mexican headline inflation number. We are seeing the crude oil bounce up right now. We're at 56.89. Don't forget, remember, I do have some resistance there at 92, 56.92. We did have, I said 56.91. But remember when the trade news came and the algos went the wrong way and they popped up to 56.98 and then quickly dipped off. So just keep that one in mind. And also we were looking for 56.99 to be resistance anyway. Bear with me. Anyway, Mexican headline and core inflation at 7 a.m. Eastern. Of course, weekly jobless claims, 8:30 Eastern. And that's going to be it. Wow. The only thing we have for today is weekly jobless claims from what I'm seeing here in the States. Mexican inflation at 7 a.m. Eastern. Bank of England, 7 a.m. Eastern. No one expecting anything from them. And we finally got the Reuters retail sales for Italy, a beat here. I'm not sure what's pushing the crude oil. I mean, it was very oversold, but I'm just saying usually in European trading, we don't see that much of a movement. We're seeing that here. Bit of a surprise. We are seeing the euro a bit on the bid. You can see here, not doing too bad. Cable also a little bit stronger. We are seeing basically overall the dollar paring back. We had in our bias chart resistance for 98.11. If you saw the Asian analysis, Peso once again. I put on the Asian analysis, another day, another failed rally. And there you go, 1910. I was talking about it in the FX Daily Roundup. Some people were still looking for a rally, and also I was doing a review of that. I'm like, rally from what? You know what I mean? There's no rally here. I mean, keeps failing. I mean, it's oversold. That's about the only thing you can say. And anybody that has been short the Peso, and I think it's mentioned in the Daily Roundup, you know, they pretty much milked this cow for all it's worth. So you're just seeing a little bit of short coverage. So there's nothing I can see that's rally worthy at all here. But anyway, there we go there. And dollar CAD made it up here. We actually got up here to, we didn't close above that 31.82. We actually closed about 2 pips below it. That 31.82 close above it would open the door for us to move even higher. We didn't yet. So anyway, As I mentioned, we're seeing crude come up in here. Got some resistance, and don't forget 56.99. 56.99 was the resistance that I had, and 56.98 is where the algo stopped when they went the wrong way in the trade news delay announcement. And but S&Ps, look at this! Wow, look at that! And still another high. Holy smokes! So I was wondering, I go, what is it pushing the crude oil high? I guess they're getting a little bit of that risk on sentiment. All-time highs again right now in European trading. So there you go. Gold continues to sit here lower. So let's go on and we'll go and move into the news. So since the dollar strengthens versus the yen on Chinese ministry comments, the dollar gained versus the yen on Thursday after comments from a Chinese Commerce Ministry spokesman about the terms of a possible trade deal prompted investors to dump perceived safe havens such as the Japanese currency. The Chinese Commerce Ministry said that China and the U.S. must simultaneously cancel some existing tariffs on each other's goods for both sides to reach a phase one trade deal. And bear with me. Okay, the peso, I mean, the dollar yen, I mean, we're not above 109. I mean, it did take a quick jump, but I was thinking the way they said it, I thought we're already above 927 if that was the case, but that's not the case. The proportion of trade tariffs canceled must be the same, and how many tariffs should be canceled can be negotiated, said the spokesman. The dollar jumped to near 3-month highs versus the yen, retracing its 0.3% losses from the earlier in the season, earlier in the session. Adam Cole, chief currency strategist, RBC, said Chinese comments improved the market sentiment trade negotiations, hopes for the trade deal. Been waiting after a senior official of the Trump administration told Reuters on Wednesday that a meeting to sign the deal could be delayed until December and that a venue had not been agreed. Expectations were depressed, and it's hard to beat expectations when they're that low. Or it's not hard to beat expectations. Chinese offshore yuan strengthened past the key 7 per dollar. Aussie and New Zealand dollars, proxies for risk, which have been weakening, were up. Similar gains were also seen in the Norwegian and Swedish crowns. U.S. and China have imposed tariffs. Okay, we already know about that. Then the other stories are pretty much nothing because it's such a quiet day. Starting to get post-election blues if Labor wins majority. Starting to retrieve a post-election balance of around 3% if Britain voters give the ruling Conservative Party a majority on December the 12th, but will fall 2% if the opposite party gets a majority. And this is just a poll story. Johnson failed to live up to his promise that the country would leave the EU on October 31st, but December's election results could result in a hung parliament and threaten to drag Brexit debate past the latest deadline of January 31st. Still, the voters returned Johnson's party with the majority, raising the likelihood he would be able to get his withdrawal agreement ratified. Sterling would rise immediately 3%. Conservative Party majority would imply a quick approval if the withdrawal agreement, thus ending uncertainty about Brexit. Labor majority, on the contrary, would add new uncertainty because they seem to negotiate a new Brexit divorce and then hold a referendum on whether to leave. These terms remain. Well, I'm not really interested in these poll stories. They're just outlooks over the next 6 months. Over 40% of 63 analysts said the dollar index would weaken around 1 to 2% in the aftermath of the Phase 1 trade agreement between U.S. and China. And with that, we can just go and move on to the analysis. The news stories were very light. I mean, obviously you're seeing, I'm not sure what's up with FX, but there's not really, we're just not seeing that movement. You saw yesterday, the range was just pitiful. Very, very tight ranges for the most part. We did see dollar CAD move higher, but as I mentioned, we need a daily close. That was in the, and I've most know that in the chat room. A daily close above 31.82 would allow the next move up, and we came up a little, really just a couple of pips short. We did push a little bit higher beyond that after the close, but we've since pulled back 31.67. You have to be careful with this one because we do have Canadian employment jobs tomorrow. Canadian employment, and the thought may be with the USMC and all that, you could see Canadian dollar strengthen. Thanks, Rick. I appreciate it. Thank you very much. I was clearing my throat, and so thanks a lot for pointing that out. Appreciate that. So what I was saying here is on the euro dollar that, let me go back to this. Sorry about that. Appreciate that, Rick. That the analysis from the Asian session was the euro stayed within a tight range. Analysis remains the same. Support below is 1047 with resistance at 1113. That was the exact same resistance levels we had yesterday. What I was stating here was that we were trading in a very tight range, but that being said, at least the euro has been able to hold. And I was attributing some of that to the bunds because you can see how weak that the bunds have been. How weak the bunds have been. And even though we saw a little bit of a rally yesterday, you can see the bunds falling back. That's going to provide some support. And what I was saying was that it's the bunds, higher prices, lower rates is that what drove the euro lower for the most part. You can look at other things, but this is what really drove it. And as we fell back, this is what allowed the euro to rally. And I'm a bit surprised that we had fallen, down here to the euro. But then again, like I said, the other day when someone in the chat room was asking about, hey, is the euro bullish or what do you think? And I was saying, I think it was just, and I told him, I mentioned, I go, I'm not even trying to be sarcastic. I think it was just long liquidation. And I put on here long disappointed liquidation because I think a lot of people thought the euro was really going to take off. And I thought it would even go up a leg higher. I wasn't that bullish, though, because I kept saying is that I thought when people had the chance to get out when we made that run in the upper 1170s, I thought long should have got out and then looked for a regroup around 1110 or so. People try to ride this thing for the next level. But that being said, I think it was more that. And I think that kind of is holding because it's not a new selling of the euro per se here because it's holding up so well. I think this, like I said, I thought on this first run, we had such a nice run, and I thought people should have taken the profits there if they were long. We came back here, and we made another run, although it looked like we could push higher. But then when we failed here, this is in a different way, but remember how much I dogged the peso when the peso couldn't come back. This is a bit reminiscent in the same way, but it's not the same technical structure. But my point being is that I think this is more about very disappointed longs who thought we'd be up here. And then technically it looked like we could have been. We could have broached these levels and pushed higher. But we came back, and I think that is a case of disappointed longs because if it was more than that, we'd be much lower. Technically speaking, we could easily be down here at 1047. And we weren't yesterday, and we're still holding up better today. So no change there. Cable, this thing has really held up very well. Just about the time you think it's going to slide, it holds, and has been holding a very tight range. And I don't see anything at all happening. To me, I think this is dead money. Look at these ranges here. Yesterday's range was what? 02, let me see. Basically 29. Yeah, basically about a 50 pip trading range, literally a 50 pip trading range here. So we're just not even moving after we saw this this great volatility, then absolutely dead money. Says cable, much like euro, stayed within a tight range on Wednesday. Analysis remains the same. Short-term momentum is turned lower with support coming in at 27.43, confluence with 27.63, the 23%. So the analysis has remained, at least from a technical standpoint, has remained the same. 27.63, although it seems like it's a long ways from there, and 29.26. No change. Moving to the Aussie dollar. Aussie remains moderate in a 40 pip trading range. Resistance is 69.44 with support at 68.52. Now, I will say this. I mean, it almost seems like, wow, that doesn't even sound like this much of analysis. But here's the deal, folks. We're just not moving. You see what I'm saying? Now, I mean, it's like, wow, look, there's big movement in the Aussie. It's all it's done is just taken out these two closes here for right now. And even the range is relatively tight. And the reason the Aussie is moving is, remember, we just covered the current story is Chinese ministry comments stating about, hey, we need to remove these tariffs. And the suggestion is, hey, we're getting closer. So it's giving the Aussie a bit of a bid. But we're just not seeing any movement in FX. I mean, you saw that, a 50 pip trading range in cable. Heck, we used to see 50 pip ranges in a 15-minute bar, and I'm not even exaggerating. That was 50 pip range for the entire session, all from Asia to Europe to the US. 50 pips yesterday when we used to see 50 pips literally in a 15-minute bar. So we're just, that's what I'm saying. We're just not seeing any real changes here. Well, as I mentioned, 69.44 on the upside and support 68.52. So we're just, once again, marred in a very tight range. Let's go and move into the Kiwi. Kiwi continues its mild drift lower. Support is 62.36 with resistance at 64.36. And as I mentioned, look at yesterday. 63.60 to 63.89. Holy smokes, folks. 29 pips for an entire session. From the Asian session to the European session to the US session. That's why the analysis may seem rather drab right now because, well, I can't help it because we're just not moving. We're just tight. So we're a little bit higher, but once again, they got a little bit of bid. The Aussie and the Kiwi based on those Chinese ministry comments. And it's not even that much of a bid. It's just, as I mentioned, it stopped the mild drift lower. That's about it. So same thing, essentially. No changes here. Let's go move into the dollar CAD. We have seen some change there. Okay, it says the dollar CAD came close to finishing the day above the bias chart resistance of 31.82. Upside momentum is intact. Resistance is 32.12 to 50%, and support is 31.36. So here's that prior 32.12. The market came up short. Remember, I think the high was 32.07. I was really ticked off with myself that day. I think I even mentioned in the daily roundup. I remember this was on, was that? No, it wasn't in the PDA. It was FOMC. I was so mad because I remember we had a resistance. Remember 31.36 in this market couldn't get above it. And then we had 31.62 as resistance. And some of y'all shorted it against there. And as the market kept rallying, I'm like, wow. Well, we were thinking, hey, this could be a little bit bullish for the dollar on this FOMC. Let's see what happens. So I did the analysis. I'm like, and I even put the 50% there. And then when we got the FOMC, I completely forgot about this. And here this is and we come up at 32.07, and the market quickly sells off, and the rest is history. We continue to sell off, and but anyway, that would be the next key resistance here, this 32.12, which we have not got to yet. We came up short. We came up to, I think it was 32.07, but we did not close above the 31.82. So I'm put on here the momentum is still intact. But here's a concern, and I mentioned that. We do have Canadian jobs report on Friday. With the thought is that with the USMC and this whole trade deal, it may work to the Canadian dollar's benefit. So be careful. To me, from a risk reward, ahead of the Canadian jobs, it probably makes more sense. Well, for those that would be aggressive, would have been to short in this area. If you want to be aggressive, and at the very least, you may have to wait once we get past Canadian jobs. We'll see. I mean, I haven't paid that much attention to the Canadian economy. But like I said, the risk is that once we get past there, we could really start to, we could be back down here at this potential support level we're looking at, which is 30.93. Looking at the bias chart, it's going to be 32.12 on the upside. Downside is 31.36. Okay, let's go to the peso. And you know how much I've dogged this currency. You'd have thought that I had an axe to pick, or that I got stopped out or something, but I actually haven't traded this pair close to 2 months now. But from a technical standpoint, I thought it was exceptionally disappointing. I've already gone over that umpteen times, but we'll go with the analysis real quick. So the Asian analysis was dollar peso, another day, another failure at the breakout level of 1923.6. Look, folks, this is why it's so important. I mean, everybody, you can trade the only way. Everybody has their own way to trade. Blake likes to say many ways to skin a cat. There's no right or wrong. But like I said, people have always asked me, why do you put your levels there? Why don't you put your resistance levels at the high and at the low? And I always say I put them through the bar. And, one of the things also is that with FX, you don't really get real volume analysis. I'm saying is, if, you do, you look at volume analysis on the futures market, you get that. You can't get that in FX, okay? I mean, you can look at CME products, but you can't really see that per se. But when you run it through these bodies, that's where all the volume is taking place. And you can see this. I've had this 1923.6 level up at least a couple of months, at least that. And you can see how this market has really, I mean, even on these moves up in here, I think this was really originally when I had it, when it broke above this. But anyway, you can see how this market has continued to respect this pivot. And that's why I've had it in red, in a maroon color. Since on the upside to the downside, even back up here. And that's what I'm saying, another failed rally. People keep trying to buy this, and I really don't get it. Honestly, I don't, unless you're just trying to play a scalp, because there's absolutely nothing bullish about this market. I just don't get it. DK Trader was mentioning the earlier about, we're looking at the year about maybe an inverted hammer. At least that's something you could hang your hat on. Tell me, is there a bar here that would suggest a bullish, take? I mean, and even here, you might say, well, that looks like a bit of an inverted hammer, but it's not making new lows. You see what I'm saying? So the only thing, as I mentioned yesterday, the only thing that's you could point to this is, okay, the anyone that's been bearish, that's milked this cow for all it's got, is saying, well, it's not going any lower, so I guess I should cover my shorts. That's about the only thing you can hang your hat on. So I really don't get where people are trying to buy this for a bullish position. I just don't get it. I mean, please enlighten me on what you see that is so bullish about this market, because I really don't get it, and the market's proving you wrong. Other than maybe you're catching a nickel of a move on the upside maybe, but it continues to fail here. Anyway, like I said, you think I'd have an axe to pick, but I'm just saying, to me, it was just so clear as a bell, and I really don't get people buying this thing. But, hey, to each his own. But anyway, like I said, you think I'd have an axe to pick? I probably would have. I mean, against this, I'd probably have better axes to pick over the years with the euro. Yeah, I know there's a case with the peso. Honestly, I don't get it here. But anyway, so support is 1908, and that was it here as if we broke, which I was giving it the benefit of the doubt yesterday. So it's back to the drawing board here. We'll go 23.6. Let's go to the dollar yen. One of the things, and I'm going to go back to this again, I think it may be helpful, is the thing is you have to go with the technicals. I mean, we always like to combine, like at the beginning of the show, we'll look at some news stories. The news has been pretty light to give some flavor for the day, okay, on the on the markets, you have to say what's happening. I even just asked earlier, hey, I mean, wonder what's going on with the crude oil. We're really rallying up pretty good. Although we did, once again, we just talked about how that key 56.99 was key, and looks like the high was 56.96, but trading is taking place in European trading. Like, what's up? Well, we just saw on the S&P's new all-time highs. Okay, that's what's up. So you got the risk thing. But the thing is you have to respect the technicals here. And I'll give another take here that is on a different spin. So when I'm looking here at the the euro dollar, that's why I'm saying I think this was more about disappointed longs. And as I mentioned the other day, a couple of days ago when we fell down here, one of the guys was asking chat room, what do you think? I mean, what does that look now? And I go, well, it's still bullish as long as it's holding above this 38%. That's all it's done. And that's what I'm saying. The euro's proven itself right now. I mean, once again, I think this was more about disappointed longs because once again, we could be a lot lower and not even fall out of the bed. We could be down here to the 1040s and the market would be testing. But you can see here that the euro is still holding its own right here. So it's telling you that it doesn't want to go lower. Now, whether it does or not, we say, but the charts, the technicals tell you what's going on. Okay, so as much as I like to factor in a little bit of fundamentals for the flavor, the tone, maybe we're getting a lot of weak German data that has a bent to it, for the euro to go weaker. That being said, we've already gone past a lot of that. But I'm saying right now the euro's holding its own. It can't get higher, but at least we're holding our own here. And that's what I'm saying is about the case with the peso. Matter of fact, to get to another market is the dollar yen. Here's a good case in point too. Looking the other way. Look at this. Look at the S&Ps. Another all-time high, okay? And look at the dollar yen. It doesn't want any part of this 927. And so, once again, I know Amanda had been selling this thing, and she's done very well. I mean, I think just the other day, was it non-farm payroll? I think she sold it 1 pip. It got to 928. I think that's where she sold it again. And that's what I'm saying is respect the technicals. Respect the technicals. And so that's what I'm saying is you would think with S&Ps at all-time highs, this dollar yen honestly should be above 111. We should be at 111.50. The market's telling you it doesn't want no part of this. That's what my thinking is that even if we do rally, if we get the phase one announcement, we already said if we got a daily close above 927, we could open the door for 1050. But my concern is if we did get that close above here, we might go like this, but within a couple of days, we're going right back down the hill again. So that's what I'm saying about the technicals. Charts like the peso and the euro are telling you something. I mean, they're just telling you, however way you want to spin it, they're telling you they want no part of, the other way. And the dollar yen wants no part of this 927. That 927 is holding like the Rock of Gibraltar. But anyway, that's so in the dollar yen, we'll go back to the analysis. I guess the analysis is, we talked about not being able to provide any real detailed analysis. I guess we're getting that by me, going off on a little bit of a tangent, but that's my take on this, is that you have to respect those technicals because they will tell you. The dollar yen remains bid with phase one anticipated resolution along with rising equities. Resistance remains 927 with support at 860. And there you go, 927, 860. And so there's really no changes here here with the dollar yen. But that's my point about respecting these technicals here. Or as you know, sometimes we don't know when a market's going to go in and change. And you can see here on that day. And like I said, Amanda got short, I think right there at the very, very top. But look at that, a nice gravestone doji. And look, might be a little bit long, but I'm just saying, but pretty much a gravestone doji if you look at it in context. You see what I'm saying? But look, nice pullback. Now we have come back, but like I said, until it breaks it, you just keep playing these ranges right now. But this dollar yen should be a whole heck of a lot higher. Honestly, this dollar yen should be at 1150 by now. If you look at what the S&Ps are doing, the whole Chinese talk, blah, 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 and it's just not happening. It's just simply not happening. Let's go move into the dollar index. I guess I should be taking shorts at the peso at 1923.6, and the one time I take it, it'll probably spank me after I dogged it so much. But anyway, here we are with the cash dollar index. So let's go to the cash dollar index. So it says the dollar index is sustaining its upward move. Resistance is 98.11 with additional resistance at 98.43. The dollar index will need to close the week above 97.89 in order to offset the bearish outlook. Support remains 97.48. And that's the same thing here. It certainly looks bullish, but once again, it's going to have to get above 97.89 by the close of tomorrow in order to negate the downside bearish outlook. Now, this I will give it credit, is that when it came down here, like Blake likes to do when we, let's see here. Bear with me. Now, where's my doggone mouse? Okay, here we go. Let's go. Blake likes to do things like that. Okay, so when we first fell and we were rallying, I'm like, you know what, this thing, I said it from the previous week, this thing is still bearish, which it was, still remains bearish unless we get a close above 97.89 on the week. So we kept rallying, okay? So we couldn't do it, and we rolled back down the hill. And I was saying, hey, even if it rallies above 97.89, all it's done is taken out the bearish picture, nothing more, which is still true. So we came right back down the hill because we failed. We couldn't close above, we couldn't fill the bill. So we went right back down the hill. You see that? Respecting those technicals. Remember that 97.89 has been huge. So here we go back down the hill, okay? And look like we're going to get past 97, and here we are going right back up, okay? So I think here we are now, okay? So now the difference is it would still, in my book, all it does is negate the downside picture, but I got to give it props because it will come down here and have a little bit of a double bottom here on a very short-term basis. So it could extend itself. But that being said, in order for this market to go, go from bearish, it could, if it closes above 97.99, it would negate the bearish picture. So you can't be that you're bearish, at least from a technical standpoint from my take. But in order for this thing to be bullish outright, we'd have to get a daily close above 98.65. And you can see that would be right here. That would take out all these bars here. Then it would be on bullish. The resistance level right now is that return level. Remember, that's why I was so bearish the dollar, because remember, we were looking for 97.89 on the way down, and we did get there. You see right there? And I thought we were going to see a hell of a bounce, and the bounce was all of 21 ticks, and then we rolled right back down. So that's why even on the way back up, I was so bearish, because once again, once it got down there, it couldn't even rally. So if you're looking for any additional resistance, it's 98.11. Followed by 98.43. But the market does not turn bullish unless you get a daily close above 98.65. But once again, if we get a daily close above 97.89, all it does is negate the bearish outlook. But we've got a better case for bulls here after we've come down here twice and we're going to come back up. But to me, it still wouldn't be bullish. It would just be, okay, it could run a little bit further now that we negated, but that'd be it. Let's go and move on to the whatchamacallit, cross rates. Okay, the Kiwis just responded. Remember, we were already sliding back. We were talking about, man, this looks terrible. Now, these are two nice gravestone dojis here. And we did press lower, but remember, we've been trading in very tight ranges. Um, but we have rallied back. And that's not a huge rally, although when you look at it, it looks like it's a huge rally. But it's on this whole Chinese ministry comments. Remember, the Kiwi and the Aussie have moved higher because the Chinese ministry comments about, hey, we need to remove all these phase one. For the phase one, we need to remove all these tariffs, blah, blah, blah. So people are thinking, wow, we're getting closer because now it's not the, one insult to another insult. Now we're really starting, looks like we're coming close. So that's why we got the Kiwi and the Aussie strengthening. So that being said, we got to fill the bill first. So the resistance right now is going to be right there. 69.80. So it's not really a whole lot. And we do have some momentum going. So it's going to have to be right here. You know what? It's going to be this 70.20. It's going to be because, once again, we're getting closer to this deal signing, and we can easily push back here. The key will be these highs, but they can easily goose those stops. So the resistance is going to be the 70.20 here. I don't know why my mouse keeps jumping all over the place, but it's ticking me off. So let me go on and pull up the. So this now moves to 70.20 because it looks like we're getting closer to this phase one. Not that it's not something everybody's been thinking, but we're getting closer and we could easily push past some stops on here. Support clear as a bell is right there, that level, 68.83. Just came over the squawk. Yeah, they're talking about the same thing about they're saying about these tariffs need to be rolled back if there's going to be a trade deal. So, you're now, instead of bickering and trading verbal blows, now it looks like we're getting closer because now they're saying, hey, you need to do this first and you need to do that next. And that's what just came across the squawk. That once again reiterating about that needs to be taken off. So it looks like we're getting to close. Once again, we got the crude moving higher. Now I was wondering, why is it coming off these highs? Pretty decent amount. Well, once again, we got that risk on because now we got S&Ps at highs. Euro yen. Well, we're seeing the euro strengthen a bit here. We talked about that. So it's kind of trying to get its mojo back. So resistance is going to be right there, right now. 2097. They're saying expecting to cut the growth forecast for Italy. For the autumn forecast that's coming out, so be worried about that. It may not push the mark, but it may keep pull the bid a little bit out of the euro. So just to let you know. Support's going to be right there. 2037. Euro on. And see, even though the euro's holding, you can see here the odd is doing very much better with this Chinese ministry news stuff. With this, once again, I don't want to beat a dead horse, but with the thought that there's, once again, they're not trading verbal blows anymore. Now they're saying, hey, you know what, before we sign this deal, you got to knock off some more of these tariffs. That means, the suggestion or the implication is that, hey, we're getting closer because we're now not, it's just like as if you had a fight with maybe a loved one or spouse or girlfriend, boyfriend, whatever. And, instead of you taking verbal blows, now you're saying, well, this is the way we got to do to fix things. So we're getting closer there. So you can see where the Aussies, even though the euro is kind of moving up a little bit higher, while we have the crude now at 56.98, I guess we can push it a little bit higher. If you're scalping on a short-term basis, remember that 57.09 was key on the 5-minute on the way down. So that's probably where they could probably push to. But anyway, I don't really trust moves in crude in the European trading. So But anyway, let's go back. Okay, so anyway, that's why we're seeing this. Even though the euro strengthening, the euro dollar, you can see here it's still losing on the weekend of the Aussie because the Aussie is benefiting, as is the Kiwi with this Chinese ministry. It's a little bit further on the bid. We are at support here. Can we push a little bit lower? Yeah, I would think so. Not maybe it may not happen today, but the potential is for it because of this Chinese ministry news. My thinking is they would probably hit the stops a little bit further. So where would be your downside risk potentially? Or maybe if you're short, where could you maybe stretch these stops? If they goose the stops, look for 60.21 right there. I haven't traded the cross rates. I was trying to do a little bit of that, and things, finally got cooking in the FX, and then I started moving into gold and now crude. Resistance is going to be right here. Actually, it's going to be right there, that line there, which is 61 even. Let's put it like that, 61 even. Wow, 57.02 in the crude. 61. If you're taking a scalp, keep an eye on that 57.09. That was that key area on the 5-minute, and then beyond there, 23, and we never did make it to 57.30. That was my entry. We've got that range between 57.30 to 57.43. One of the good things, and not good things, is what I'm seeing is, and I've taken my caution with trading crude the last few days because I'm trying to get a little closer to it. If you can remember these levels, like on the 5-minute chart, if you can remember these retrace levels and stuff, it really helps on the way back up. Anyway, talking a lot of, I'm all over the map, but I'm just watching it on another screen here. 57.03, but once again, watch that 09. That was that key level that we had to hold on the 5-minute when we came back, and we couldn't hold it, and that opened the door first down to get down to 80, and then all of a sudden the bottom fell out. Euro Kiwi, you're seeing the same thing here. So even though you're seeing strength in the euro dollar, the euro Kiwi is being turned back here. I like this resistance from there, which is 74.19. If it wasn't for Europe, I'd be taking a scalp against it. 57.09. If it went during Europe, I don't trust some of these moves in European trading in crude oil. We're at 57.06 right now. It looks like the high has been maybe 08 or something like that. Support 73.16. So that remains the same. Let's go to Aussie Yen. We do have a little bit of a tweezer on the minute chart. On the Aussie Yen, you can see how we're just really starting to move ahead. Lately, we've been looking at the daily on this to once again see how far this thing's going to push, so bear with us. Thing is with European trading, the cap 57.09 is key. Once again, SPOO's all-time highs, really allowing for that bid to come up, but once again, all questionable. So here we are, Aussie Yen. Yeah, right there. 75.61. Well, 62 right there. That's fine. Downside, 74.73. That's held in place. We got just a hair bit below it. All good. Let's go to the guppy. Guppy holding up really well. No changes in the guppy right here. Those are going to stay the same. Right here. 40.73, which has held this market. The other day, we were right up in here. Someone was saying, hey, we're highs. I'm like, oh, the bias chart resistance right there. And we eventually did rotate lower. 39.70, you can see we held that, so no changes here. Let's go to Sterling Odd. Once again, you can see the strength in the Aussie, even though the Sterling is still holding up well. If we do hit some stops, no changes. We're going to go and keep this the same. You can see it is keeping the upside in check, but can we hit stops? This is where we'll go if we hit stops. down here. It could be a little bit higher right there. You see here, 85.63. We've got 85.50, but no changes here. Looking here. Look at these spoos. Unfreaking believable. And that's why we got that bid in the crude oil. Look at that. Unfreaking believable. New all-time highs. And it's rallying on those, once again, Chinese ministry news. Once again, they're saying, hey, you should be taking our tariffs, more tariffs, we're going to sign this deal. Wow, we must be getting close, and we're no more verbal sparring. So that's the deal there. Hence why we're seeing the run up here in crude oil too. Okay. 2-hour chart key would be right there, 57.15. On the CFD, probably 57.13 in the futures. Gold just sitting here doing a whole bunch of nothing here. And that's all we have. Thanks for joining us here on the European Crossover Web.